Small cap stocks are those which have a market capitalization between $300 million and $2 billion. Such companies are mostly in their early growth phase, striving to make a place in the market. They are considered more volatile as small cap stocks are usually unprofitable, but they also come with greater potential for growth. Hence, investing in small cap stocks is risky but can prove extremely fruitful. In the ongoing market downturn, there are many small cap stocks with great future growth potential, available at cheap prices due to high volatility. This presents a great entry point into potential multi-bagger opportunities. Therefore, here we have compiled a list of the 5 best small cap stocks, with huge future growth potential for you to capitalize on. Up first is a global technology company based in Israel, Perion Network Limited, trading under the ticker symbol, PERI. It provides advertising solutions to various stakeholders like brands, agencies, and publishers. The company connects advertisers and publishers through its intelligent hub, giving it an edge over its peers who cater to brands or publishers. This model makes advertising more efficient, while also increasing the return on investment for both brands and publishers. The company's portfolio of offerings includes its new cookie-less tracking technology, SORT, which has been gaining much traction. Its customers even include Mercedes as of the most recent quarter. Perion also offers premium ad features like QR scans, customizable backgrounds, and in-game ads for sports events. The sports events ads are live picture-in-picture, to ensure a seamless viewing experience without any disruptions. Moreover, it is also helping Microsoft with monetizing its Bing search engine. The company recently released its third quarter earnings report, with a 31% increase in its revenue to $158 million. This included the video revenue increase of 209%, and the connected TV revenue surge of 134% year-over-year. The bottom line improved by 94% on a non-GAAP basis, while the adjusted EBITDA jumped by 87%. The company revised its full-year revenue guidance to between $630 million and $635 million, which represents an improvement of 32% year-over-year. Additionally, the adjusted EBITDA is expected to increase by 72%. Thus, with an innovative suite of offerings and a strong financial profile, despite being a small cap stock and the market downturn, Perion is a great small cap stock with much potential for growth. Up next is ACM Research, a manufacturer of cleaning equipment for semiconductor wafers. Trading under the ticker symbol, ACMR, ACM is a US company that primarily operates in China. Thus, it brings 2 advantages for its holders: exposure to a high-growth industry without the high risks of volatile chip prices, and relatively safe exposure to the Chinese market, as the company continues to work on its globalization strategy. In addition to working on reaching global markets, the company is also expanding its product portfolio, and has Tier 1 chipmakers as its customers. This small-cap company comes with both high growth potential and solid profitability, a rare happening for small-cap stocks. ACM has been growing its earnings per share by 28% annually for the past 3 years, and is expected to continue delivering double-digit earnings growth over the next several years. In contrast to the US semiconductor industry revenue growth forecast of 7.1%, the company's top line is expected to grow by 16% per annum on average for the next 3 years. In the latest quarterly earnings, ACM registered revenue growth of a massive 100% year-over-year, to $133.7 million, while the net income surged by a mammoth 107%, to $21 million. The figures surpassed analysts' estimates by 36% and 18% respectively. Therefore, ACM Research is another great small-cap stock with huge future growth potential, worth adding to one's investment portfolio for the long term. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving or about to move. You will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Coming next is a Canadian small-cap company, Celestica Inc., trading under the ticker symbol CLS. It provides supply chain solutions to equipment manufacturers and service providers throughout the world. Its customers hail from all kinds of industries, ranging from aerospace and defense to telecommunications and storage. The company also offers end-to-end product lifecycle solutions, as well as design and manufacturing solutions. In the recent quarterly financial results, Celestica improved its revenue by 31% to $1.92 billion, with both its segments growing by double digits. The bottom line came at 52 cents per share on adjusted basis, against 35 cents in the year-ago period. Adjusted return of invested capital also improved, reaching 19.2%. For the fourth quarter of 2022, the company now expects a revenue between $1.875 billion and $2.025 billion. The adjusted earnings per share is expected to be in the range of 49 cents and 55 cents. The 2022 revenue and earnings are expected to improve by 27% and 43% respectively. Additionally, Celestica expects revenue to be at least $7.5 billion in 2032, with adjusted earnings between $1.95 and $2.05 per share. Moreover, the company's stock trades at a price-to-earnings ratio of around 6 currently, against industry average of 9.44. With a strong fundamental and financial profile, Celestica is also an interesting small-cap stock worth considering for its future potential. Up next is a pure-play uranium company based in Canada, Uranium Energy Corporation, represented by the ticker symbol UEC. The company is advancing the next generation of low-cost, eco-friendly in-situ recovery mining projects, preparing itself for huge future growth potential. It is continuously working on expanding its asset portfolio with accretive acquisitions. Its latest string of acquisitions includes Uranium One Americas and UEX Corporation. Acquiring these two companies has transformed Uranium Energy into the largest diversified North American-focused uranium company, by adding to its total resources, production capacity, ISR projects, and processing infrastructure. Additionally, the company also completed the acquisition of a uranium development project from Rio Tinto plc just last month. Furthermore, Uranium Energy also has a strong balance sheet, with $173.3 million in cash and liquid assets against no debt. The fiscal 2021 revenue was $22.95 million, from spot market sales of uranium inventory, while the current inventory balance is around £41.77 million, with a value of $85.2 million at the current spot price. The gross profit was $7.2 million, for the year ended July 31, 2022. While the company's financials are not very impressive, it has a firm balance sheet and diversified asset portfolio in a world-class, politically stable, and uranium mining-friendly jurisdiction. This, combined with the bullish outlook of the uranium industry, poses well for the future growth potential of uranium energy. The last stock on our list for today is Heidrick Struggles International, which is represented by the ticker symbol HSII. Based in the US, it is a staffing and employment services company which offers executive search, consulting, and on-demand talent services throughout the world. Near the end of October, the company posted its third quarter results, with net income of $28.3 million, on revenue of $255.2 million. The adjusted EBITDA was $33.3 million, with an adjusted margin of 13%. cash position improved by 30.9% to $456 million, while the revenue and earnings were impacted by seasonal slowdown, economic instability, inflation and unfavorable foreign exchange fluctuations. But despite the numerous headwinds, the earnings were still better than expected, as the company continues to make investments for long-term growth and digital innovation. In spite of the threat of recession and market slowdown, the company expects to perform beyond its pre-pandemic record years. The firm is working on developing complementary digital products for strategic differentiation from its competitors and achieving sustainability. Furthermore, Heidrick Struggles has a forward price-to-earnings ratio of 10.54, against the induced average of 11.15. Cherry on top, it also pays a quarterly dividend with a forward yield of 2.19%. Thus, its diversified business model, strong global presence and dividend yield, makes the stock a great buy in small caps with future potential. This brings us to the end of our video. We hope the information we provided has been of meaningful value to you, and would help you identify some good small cap stocks worth adding to your portfolio. We would love to hear your thoughts on our list in the comments section below. If you would like to know more about different stocks that are fit for various investment strategies, do check our website, stockstelegraph.com.